Hello all, welcome to Value Trace channel. Today we will try analyzing this the Nifty and its technical analysis. This length, the length of the video could be a bit heavy and could be a bit large, but I will guarantee you that you will understand and you will appreciate eventually by the end of this video very beautiful concepts which can be applied across many indexes for a very long time to come, like for all the times ahead. There is a particular pattern with which the market behaves, and I would like to share that with you. Okay, so without really wasting much time, let's get into the video. So here you can see that I have already marked certain channels. Okay, I have picked this one. This is the first one and this is the second one. So this is the channel. The first and second touch have already happened here, and the first and second touch are also already happened here. Okay, so this is the channel that the market has developed. So as far as this channel is concerned, as long as the market respects this channel, the market is likely to go, let me show it to you, by the end of this expiry, which is on Thursday. It is trying to reach somewhere to the range of 22,999, which is almost 23,000. Okay, so this is a range to which the market is likely to go for this expiry. We are just talking about the potential to which the market can go. There is absolutely no guarantee that market would actually go this far, but it is just a potential that we are talking about. Okay, hope I am clear with this. Now, how do people understand and how do you come to the judgment that market can go here, and how do you draw these lines of channels is something that we'll try to understand. Okay, so for this to understand, we will have to really look back into the history and try analyzing that how many times it has happened recently, so that the confidence to take a trade comes from the historical understanding. Okay, so let us go into the historical understanding. Okay, so let's go a bit here from here. Okay, so here you can see anytime market actually makes a further move, a final upside move, it tends to grab the liquidity, you see, and it always leaves you with a hint that to which levels the market is actually going to. Okay, so here you can see that there are two levels which are marked. Okay, and after which there were brutally 2 days which pulled down the market. And why did this happen? Why did it break this particular low? It only happened because to grab the liquidity. Once the liquidity is grabbed, if someone had followed this trend line and held on to their calmness, that their target was achieved in the next coming 2 days, right? So this is a example wherein, remember, before that there is always the first thing is the market gives you a hint. The hint is always in the form of a trend line. Okay, to tell you, to guide you to which level that the market is likely to go. And the second is market will draw a parallel to you, will give you a parallel to it as well. Okay, wherein there is 1, 2 and it will give you a parallel. Once the parallel is established and the hint is given, so the first condition, the hint should be given, which is already given. Second, the market should grab the liquidity. Is the liquidity is grabbed? Sorry, where is it? Okay, so the liquidity is grabbed here, and then third, a parallel should get developed. Yes, the parallel got developed, and then finally the fourth is the target that has to come, that has to be achieved. Okay, so this is the first example. So did it happen only once? Let's look into the other time as well. Look here as well. Okay, before the market has, the first thing the market did was it gave you a hint by creating two highs and giving you out a channel, a trend line on the upper side, and then the next day it was brutal, it came down, grabbed the liquidity. The first hint is given, and the second the liquidity is grabbed, and third condition, which has to be a parallel that has to get developed. Here you can see a parallel to be getting developed, right? In the next day itself the target has been achieved. Okay, so it rallied all the way from 23,300 to 23,800 within a span of 1 day or 2 days, right? So now let's look to the same scenario that is developed for now. So the first case, did the market give you a hint? Yes, right? The channel is developed. And then, did the market grab the liquidity? For a moment, it appears that yes, because yesterday there was a strong capture. There was it has closed at a very lower levels. Third, so first hint is given. Second, the liquidity is appearing to be grabbed. We will talk about it further. What can be the other likely scenarios as well? We will be talking about it in few moments if liquidity is not grabbed yet. And then third, which is to the parallel that has to be developed. The parallel is developed. Now, the third condition is also met. Now, the only fourth condition that is left over is the target to be achieved, which happens to be at 22,900. So, I have made this explanation as simple as possible so that you guys can better understand it and better relate to it. Okay. So, this is how a trade can be executed whenever, especially this is very useful whenever you are going against the trend. Remember, the trend is on the beat. So, whenever you're traveling against the trend, this strategy helps immensely. So now let us try understanding the other potential possibilities that the market can make before it actually goes further. The target is fixed. Okay, the hint is given. Probably if this enough liquidity is not grabbed, I am assuming that. Okay, if the enough liquidity is not grabbed, then what can the market do? The market can come and break this established low. Can come here, which is at 22,261, and from there that can happen. Okay, so for which, so would now the question might arise, acha, if this comes to 22,200, would there be a parallel that would be still existing? If you actually observe, the parallel can still be made because this is how the parallel can come out. Okay, so the parallel does still exist, though the liquidity can be grabbed. Okay, even if the market comes out with a major gap down tomorrow, or the market comes out with a bearish note on the Monday, but still the market can rally till here. Okay, that is probably the first one, the hint is over, and the second one, the liquidity is also over, and the third one, which happens to be the parallel that would also have got developed. Okay, and fourth would be the target. So this is how usually things pan out. Now, as for the time being, this is the first possibility that the market can do. So there is nothing to be panicked even if the market falls further. Okay, so there is no reason for us to panic. It is only to grab more liquidity to move further. This is my understanding. This is my opinion. Okay, and now let's see what is the other potential that other way of market, the existing scenario. Let's suppose say that the market has already grabbed enough liquidity. Then this is the existing trend line that is following, right? So for this existing trend line, in all likeliness, if this has to get validated tomorrow, that is on Monday, okay, as tomorrow is holiday, which is a Holi, and on Monday the market has to open somewhere at this range and then take this and take this support, which happens to be first, second and the third touch, and from there you will see a rally to be coming in. So this is the second potential that can be that the market can manifest itself. Okay, this is the second possibility that the market can come out with. So these are the two scenarios as I have explained. One, the market can go straight away from here, wherein if the enough liquidity is already grabbed, remember that the market might start with taking this as a support on the Monday and start making a rally further. Okay, if that is not the case, the other scenario that we are looking out is wherein the market can come still further only to grab liquidity, and then there will be another channel that gets developed. Taking that channel into consideration, the market might go up. So these are the only two possible scenarios that the market can do. Okay, and if this level 22,260 is taken out, I will be accepting the stop losses and I will be vacating all my positions further for the onto the call side. Till this level is held, we have to maintain the position. I will be maintaining the position only onto the call side. And more to it, CPI data has also come out, and the CPI has turned out to be neutral on certain aspects and good on certain other aspects. So there is no fear as such in the market, and that can be easily understood even if you look into the VIX. The VIX has been considerably dropping, which signifies that there is no real threat that is there in the market. Here you can see that the VIX has dropped by more than 3%. So there is no significant fear that is existing in the market. So even if the fall comes, it is only to grab the liquidity and further make a move. So this is my understanding. I have shown you two of the scenarios. So I hope I have made the concept as simple and as clear as possible. Okay. If you are interested to know further, you can reach me out. You can contact me. I will be more than happy to help you out. And let me show you the positions that we have already made so that you get an understanding of it. So remember, the target happens to be somewhere at 800, 22,900 and 23,000 respectively. So these are the existing targets. Okay, 800, 900 and 23,000. Okay, I will be showing you my PN, the position that I have took, so that you get an understanding of the targets that I am looking at. So this is a position 1 wherein 22,700 call is picked up with a little quantity of just 2 lots, which is 100 positioned at 37 rupees. Okay, so the high happens to be at 83. Okay, for tomorrow if the candle, these are day level candles. Okay, so for the tomorrow, if the market makes a rally tomorrow itself, okay, I will be trying to book at least one lot of 22,700 and take out book my profit at somewhere at the range of 120 to 110, because we have to understand that 22,800 happens to be the first target. Okay, and 900 and 23,000 are the further targets respectively, right? So 22,700, once the 22,800 is taken into consideration as a target, so it would have given us 120, which is a fair value for the 22,700, and I will be booking one lot here, and I will be leaving the other lot to make the rally further, and I will be trying to book this above more than 200, the second lot. The reason being, if the 22,300 is achieved, 23,000 is achieved, okay, naturally the value of 22,700 would be somewhere around 300. So I will be trying to book the other lot at somewhere between a range of between 200 to 278. So this would be my the target for the second lot. So this would be the target for the first lot. Now I will take you through the another position that I have took. So this is another position that I have taken, wherein it is 22,600 call for this expiry, wherein the target happens to be at 120, which is actually if the 125 is taken out, probably more than somewhere around 173. Anything above this, I will be booking the profit on this particular lot. Because this is 22,600, as I am expecting my primary target to be 22,800. So somewhere near around 200 is a fair value. So I will be booking my profit anything above more than 170 for this lot. So these are the two positions, two strike prices that I have chosen, and I will be further uploading the video if once I book the profits on it, or even if I book my stop losses. Even if I cut out my position, I will be further uploading the video upon the same. So I hope this helps you. Thank you so much. So the video has become a bit lengthy, and I hope you guys will appreciate it. Thank you so much, guys. Have a great day.